Earnings season continues. We take a look at how tech giants Meta, Microsoft and Samsung performed in the third quarter. Resilient yet fragile Eurozone economies grew 0.4%, twice as fast than expected in the third quarter. And Britain's Labour Party announcing its first budget with new tax hikes of almost $52 billion. Will the new government succeed? Hello, I'm Rashad Salamat with the latest business and finance news on TRT World. Top tech companies showcasing both strength and challenges this quarter. Microsoft reporting strong growth through its cloud and AI services. Meta revealing mixed results with growth concerns and rising future costs. Meanwhile, Samsung continues to navigate hurdles in its chip business but remains focused on improvement. Well, Microsoft showing strong performances in its recent quarterly results. The company out with reported earnings of $3.3 per share. That was ahead of expectations. Revenue also exceeding forecasts, reaching $65.5 billion. About a 16% year-on-year increase. Microsoft's continued growth in its cloud services and AI integration has supported its robust financial results, with expectations for continued revenue growth in the coming quarters. Meta's third quarter earnings showing mixed results, the company earning just over $6 per share. And that was again ahead of expectations as it reported nearly $41 billion in revenue, slightly higher than anticipated. However, Meta's user growth is weaker than hoped, and they warned that infrastructure costs will rise significantly in 2025. And that's despite these strong revenue and profit numbers. Their stock actually dipped slightly after hours due to these concerns. And Samsung announcing third quarter earnings with profits beating market expectations. The company out with more than $57 billion in revenue and a $7.3 billion operating profit. But the tech giant is struggling in the memory chip market. And despite the challenges, Samsung is focusing on stabilizing its semiconductor business and plans to increase memory chip production, hoping for demand to recover soon. Well, let's get more on this. Josh Mahoney now joins us from London. He's the chief market analyst at Scope Markets. Thanks for joining us, Josh. What kind of picture is this really all painting for the state of tech? Well, I suppose globally, but specifically in the US. And let's focus in on Meta first of all.
Yeah, exactly. I mean, look, we came into this already knowing that advertising was a particularly strong point at the moment. So I did expect to see strength on that side, and it's exactly what we have seen. Ongoing question marks around this spending on AI, and that's not necessarily going to go away until we can see that it's really providing a significant boost to the bottom line. The so-called reality labs at Meta continuing to provide a drain, and it looks like that's going to heighten as we go forward, because essentially what we're moving away from is the large language models where you have to train them yourselves. And instead, the likes of NVIDIA will be pushing forward chips that are going to be self-training, essentially. That is going to ramp up the cost of it. But of course, the expectation is it will also ramp up the development that goes alongside it. But certainly, as we move forward, it's likely we are going to see many of these big so-called hyperscalers ramping up expenditures. And for shareholders, that means you can see them be on the top line, be on the bottom line, and we still see the stock heavily down after hours.
Well, we just want to turn to other parts of the Magnificent Seven, as they're called here as well. And let's have a look at Microsoft and Meta here. Now, what's really behind these impressive numbers?
Yeah, I mean, we saw already with Alphabet that the cloud business was doing particularly strong. So it comes as no surprise that Azure once again outperforms, a strong beat on that side. We're looking from Microsoft at a company that's managing to beat on both sides, and they did close in the green. It's just that after hours, we saw them move towards the downside, in particular because of the forecast going forward. They actually expect in the current quarter that Azure growth will slow, but they say it will ramp up as they move beyond that, as they're seeing some supply chain issues around that for the time being. So essentially, if you wrap up the likes of Meta and the likes of Microsoft, you'd probably say that both of them are great companies. They continue to outperform, beat estimates, but ultimately markets are a little bit hesitant about the sheer amount of money that's being invested and whether they're going to see that money back in the near term. Certainly Microsoft very confident that they will do so, and saying that if they didn't have the money to be able to ramp up spending, they would have to find it, because they have very specific use cases that people are requesting that they need to build out this AI capability for.
Josh, hold that thought because we're just going to have a look at, move away from micro and look at the macro and get your views on what's been happening with European and US growth. Just going to hold that thought for you and as we just bring you this report because we just had Donald Trump intensifying his threats to impose new trade costs on what he called all the nice European little countries. Lara Kilkaslan reports on how the United States and the Eurozone economies performed in the third quarter of this year.
The Eurozone GDP grew by 0.4% quarter-on-quarter from July to September in 2024, marking its fastest pace in 2 years and exceeding expectations of 0.2%. Ireland's unpredictable GDP growth, heavily impacted by multinational corporations, significantly inflated the Eurozone's overall growth figure. France's 0.4% growth in Q3 was likely aided by Olympic-related spending. Germany narrowly avoided a recession with a 0.2% GDP increase in Q3, driven by higher government and household spending, surprising analysts who would predict a contradiction. Spain posted a strong performance in the Eurozone with 0.8% growth, boosted by EU recovery funds. Italy saw no GDP growth in Q3, highlighting economic challenges compared to other Eurozone nations. Despite Q3 growth, a subdued outlook persists due to low consumer spending, weak exports, and limited investment. Economists predict slower growth in Q4, suggesting this may not signal a robust recovery. Across the Atlantic, the U.S. GDP grew at a 2.8% annualized rate in Q3, slightly below the forecast 3.1%, but still indicating solid economic expansion compared to Q2.
Josh, as we mentioned there, the Eurozone GDP grew by, 0.4% in the quarter from July to September this year, and that's the fastest pace in 2 years. Again, ahead of expectations, in fact, double expectations here. So the question, of course, which lends itself is this a blip or is the Eurozone economy out of the woods?
Well, as you highlighted, particular strength for Ireland, which played into this, which doesn't necessarily bode, too well for the mainland area. Also, we saw a boost in terms of Paris with the Olympics, and we've already seen in the aftermath of that we saw the French numbers coming off in a big way when it comes to the likes of PMIs and the like. So I wouldn't necessarily get too caught up on the idea that we're suddenly in escape velocity and that these rate cuts are already having a significant impact on the Eurozone economy.
Josh, thank you very much indeed. Josh Mahoney there joining us from Scope Economics. Right, let's have a look at some of the other stories that we're following for you and having a look at China now, where manufacturing activity has grown for the first time in 6 months. Now, these are the PMIs, the Purchasing Managers Index for October. It reached 50.1. That's over that 50 mark, which separates growth from contraction. The reading was above September's figure of 49.8, with new domestic and export orders picking up this month. Chinese economists expect the sector to improve further in Q4 as monetary and fiscal policies loosen. The Bank of Japan has unanimously decided to maintain its key short-term interest rate at 0.25%. That's the highest level, of course, since 2008 and aligns with market anticipations. The decision follows recent elections in Japan and really the moment expects next week's US presidential election as well. Siemens agreeing to acquire the AI specialist Altair Engineering for around about $10 billion, including debt. It's marking its first, or should I say its largest acquisition to date. The deal will see Siemens pay Altair investors $113 per share. That represents a 19% premium over Altair's closing price on the 21st of October. And that's just, of course, before buyout rumors surfaced. Transport unions holding a 24-hour strike in Argentina against the government's austerity measures. President Javier Milei's policies halted shipments of grain exports, and the knock-on effect has meant that layoffs due to the slowdown in operations alongside a demand for higher wages. Now, nearly 4 months after taking office, Britain's Labour government unveiled a debut budget plan that will include nearly $52 billion worth of tax increases to cover a hole in public finances and allow investment in public services. Labour Party MP, Afzal Khan, speaks to TRT World and says things should start getting better.
So we are in London, where Chancellor Rachel Reeves presented her first ever budget. Now, this is also Labour government's first budget in 14 years. Now, before the Labour Party got elected, it had some promises such as economic growth, better opportunities for working people, better healthcare and better education. But did the Labour Party keep its promises with this budget? To discuss more, I'm joined by Labour Party MP Afzal Khan. Mr. Khan, thank you so much for joining us today. So did the Labour Party keep its promises with this budget?
Well, look, let me start by first of all saying I am excited the fact that first time in 800 years we had a woman who was giving the budget for our country. The second thing I want to say is it's also our first budget after 14 years we have a Labour government. The people of this country have given us this mandate to turn things around. Because what we know, the 14 years, we have seen everything going in a mess. Our public services in the mess. Our NHS and health was a mess. Our school was struggling. Our economy was struggling. The interest rate was rocketing. And then, of course, the inflation also was double-digit event too. So everything was not working for us. So we've had this difficult budget. It is a difficult budget, but I think it at least turns things around, stabilizes things, and we can start working towards going up. That's what I think the Britain wanted to see.
So to you, what are the main highlights of this budget?
Well, there are lots of good highlights in the budget, I think, as well. So for me, one of the key things is making sure that we have a strong economy, because the back of the economy comes everything else. So we've been focused on that. Then if you look at it, we've seen the hospitals, record number of waiting lists. Again, the budget has been good for the NHS. It will help us to turn things around. You then go into education. Again, that's important. More money has been given chance for every child to have a good start. So the 30 million or so for free meals, again, is a good thing. And then, of course, one of the other big things, the housing crisis that we've been facing, again, money has been given for that. That's also positive. The green economy stuff is all, I think, good stuff as well. So there are a lot of good things. But of course, it's been a difficult budget because of the difficulties we found. 40 billion is a lot of money which was short, and it's every year. So that has to be sorted out. So I think we are in the right direction now with this budget. So overall, I'm pleased it's a Labour's budget, and I'm happy that things will start getting better. That's what's good.
All right, let's get more now with Vicky Price. She's in London for us. She's a board member at the Centre for Economics and Business Research. Well, of course, talking to a Labour MP there, Vicky, bound to be upbeat on this budget. But what are your views? It's regarded as an ambitious target. What do you make of the budget overall?
Well, there was a lot of tax increase in there, which is going to fall particularly on businesses. So we're talking about raising 40 billion extra. And a year, and half of that, more than half of that, will come from an increase in national insurance contributions by employers. In other words, the extra tax they have to pay for every person they hire. That has gone up from 13.8% to 15%, so that's quite a hefty increase. And also they reduce the thresholds for that tax from when it starts getting paid. So they're raising 25 billion out of that. And the interesting thing, when you just heard the MP talk about public services, is that a very large proportion of what is being raised is going straight into the National Health Service, for example, but also in defence and education. And those are the areas which have been most affected by, if you like, sort of a reduction in the type of quality that everyone was expecting, particularly, of course, for people who are waiting for to see a GP, to go to hospital and have something examined properly. So those queues are enormous and they need to be dealt with. And I think that is where the focus has been. But in addition, not just tax increases, but extra borrowing, quite a significant extra borrowing. A lot of it going for investment, which is good for growth. But of course, that borrowing is in fact quite considerable and has worried the markets a little bit. So we've seen the markets waiting and seeing what it actually means. They looked at the figures, they got a little bit worried about this. And for the moment, yields are more or less where they had been just before, where they had been raised, because there was some concern that this borrowing was going to be quite significant. And in fact, it is.
Vicky, of course, how does this budget then address, arguably, the housing problems that the UK faces? On top of that, what about the cost of living crisis as well?
It's a very good question. I mean, the interesting thing is when we look on the cost of living side, the Office for Budget Responsibility is an independent body which brings out forecasts at the same time as the budget, is now saying that actually real disposable incomes are not going to rise particularly. In fact, they will be pretty modest because they think that quite a lot of that increase in taxes on businesses is going to be reflected in lower wages for people or higher prices. So that's one thing. Of course, inflation has been coming down in the UK like everywhere else, so that's good news. Interest rates hopefully will come down as well, so that would be good news. So at least that's positive. But there is quite a lot of money being spent or redistributed, if you like, on the housing front, a lot on affordable housing. So there will be affordable housing build in numbers that we haven't seen for quite some time. There will be support for small firms in the housing sector to build. So that will be good news in terms of availability of housing. We know there's been a shortage and prices have been, quite high. So that's good news in a way. But it's going to take a little bit of time for that to have an impact. So for the time being, the growth forecasts for the UK have increased a little bit for this year and for next year, but not significantly at all. And there is a worry that unless you do get those reductions in interest rates, all the measures that we've just heard are not going to be positive for growth. In fact, if anything, they're going to be negative in the short term.
Where did this budget, Vicky, leave the ultra-rich, as it were, and the non-domiciled or non-doms there in the country as well?
The non-dom status is going to be abolished completely. The interesting thing is that the Conservatives had started doing that anyway. They had left a number of loopholes. The government is now saying all those loopholes are going to disappear anyway. Now, the question is whether you really do save sufficient amount of money as a result, because, of course, wealthy individuals who are here contribute to the economy. There has apparently been some exodus already, and there may well be more.
Vicky, thank you very much indeed. Vicky Price there in London, board member of the Centre for Economics and Business Research. Now, still ahead on the programme, African clothing and unique styles are on display at this year's Lagos Fashion Week. We have more.
Straight Talk breaks down Turkey's place in the world, triggering a power shift that is transforming a volatile region. Straight Talk, understanding the challenges facing Turkey and how it's adapting to a changing world. Straight Talk on TRT World.
Now, some car owners just aren't satisfied with the models that come off the production line. They want something special, unique, crazy even. And one of the best places to get cars customized is at the German company Brabus. And just as last month, all the top fashion houses set up catwalks to showcase their new outfits in Paris, Milan and London, last week Brabus held their own fashion parade, as Pina Nisasta now reports.
Brabus was showing off 6 of its supermodels at its annual exclusive runway show, Signature Night 24. The company re-engineers exclusive cars from the like of Rolls-Royce, Porsche and Mercedes-Benz and customizes them according to the driver's taste. This is the SUV from Mercedes-Benz's G-Series. By making already opulent cars even more luxurious and faster, Brabus tuning typically doubles or triples a car's value. For example, a Mercedes-Benz AMG GT63 SE Performance starts at around $176,000 in the US. But after fine-tuning, the customers are looking at a bill approaching $500,000. Brabus has also launched a brand new interpretation of Rolls-Royce Cullinan, the Brabus 700 Blue Sky. The concept shows off a blue sky leather interior design and 700 brake horsepower which is more than the original $563. It sells for $813,000, which is almost double the original starting price of $390,000 in the US. And it goes from 0 to 100 kilometers per hour in just 5 seconds. So, after 40 years in the fast lane, the brand has become a symbol of speed, style, and expense, revving even higher than owning a regular Rolls-Royce or Porsche.
Our task with every single design is always to ask ourselves, how can we create clear recognizability? On the other hand, we have to adapt to the base vehicle's design.
A Mercedes-based Rocket GTS also made a grand entrance with human models. And one of the fastest cars on the market, a Porsche 911 Turbo S Cabriolet, rolled in with a cheeky color called Peach. But it's not just a pretty face. This car boasts a staggering 900 brake horsepower, up from the original 640. After the tuning, the car accelerates from 0 to 100 kilometers per hour in 2.5 seconds. As the Signature Night 24 wrapped up, Brabus had impressed their customers who want more than a standard production line car and made the audience fall in love with engineering brilliance again. Pinar Nishasta, TRT World.
Well, you've got to love that catwalk, haven't you? And talking of which, we got Lagos Fashion Week. Now, it's an event which shines a light on African style with, well, a purpose here as well. Designers and artisans gather, blending fashion with sustainability, all together contriving to inspire a new vision for the industry. Celine Tuta sent us this special report.
In Nigeria, the city of Lagos came alive with style this week. This year, Lagos Fashion Week is about more than just clothes. It is celebrating community, sustainability, and African culture. Designers from all over Africa joined together to share ideas and support each other. Over 5 days, the event hosts runway shows, pop-up stores, and workshops.
We believe fashion shouldn't exist in isolation. It should be in partnership and collaborations with people, not just within your community, but across, several ecosystems at the same time that can strengthen the work that you do.
This year's theme commune encouraged designers to work with local artisans, using eco-friendly and recycled materials. Designers focused on sustainable practices and using materials that last longer. They emphasized the need for the fashion industry to rethink its impact. And they also urged for more awareness, especially about the effects on Africa's environment.
Fast fashion and overconsumption in the global north is the root cause of waste colonialism on the African continent today.
Lagos Fashion Week is not only about style, but also about change. The event gives a platform to designers who are working to make a difference. A push for sustainable fashion where African designers lead the way. With every show, they're making a statement for a brighter, greener future. Celine Tutar, TRT World.
We're moving away from different aspects of fashion and getting to one of the corollaries of the conflict in Ukraine. Ever since 2022, Russia has set a goal of technological sovereignty. That after, of course, Western companies cut off cooperation with Moscow. TRT World was given rare access to one of Russia's special economic zones that has been designated as a new Silicon Valley. Dasha Chernyshova has more.
This is the first dedicated end-to-end production of ports for multi-use drones in Russia. They would later be used to monitor construction sites, the agriculture industry, and used for general security in Russia and abroad. And just next door, highly skilled professionals are working on the complex business of automated housing construction. It takes only 25 days to build 2 4-story houses using specifically designed blocks and a special liquid, saving the cost of a human construction crew.
We're planning to build the first house here in Innopolis, to hold tests there as well, because it's a special economic zone and it is easier to get a permit here. Everyone is interested.
These projects are part of the special economic zone in Russia's first IT city, Innopolis, which provides tax incentives, special legislation, homes and infrastructure for Russia's high-tech development. This year, Innopolis celebrates 9 years since its foundation. The Tatarstan city, built to mirror the example of California's Silicon Valley, was supposed to attract IT specialists from all over the world. The city is built around the university, which educates IT specialists in English. With a total of 1,600 students, 250 graduate every year to meet Russia's growing demand for IT specialists and scientists.
And the main idea is to help attract talented people, talented scientists, talented students from all over the world to build up the system, to build up the environment that will help to boost technological development.
Officials also say that it is the first city that was built in Russia's recent history, and over the years it has become home to 7,000 people, but more growth is needed. Every third resident in Innopolis is a scientist or an IT specialist, but so far it has fallen short of the ambitious plan to attract tens of thousands of residents. Yet the local officials say it is the qualifications of specialists, not the number, that matters. The goal is to increase the number of students to 5,000 in the coming years. The city also helps companies to establish themselves, hire specialists and accelerate production, something that is even more important after many high-tech Western companies froze ties with Russia. Most of the companies doubled or tripled their revenues due to high demand. With Russia now in dire need of labor, digitalization of business, backed by high-tech development, is seen as the only way forward, at least in the nearest future. And this is why Innopolis aspires to become the country's IT capital sooner rather than later. Dasha Chernysova, TRT World, Innopolis, Russia.
So will it be a Silicon Valley or will it be a Silicon Oblast? Anyway. Don't forget, you can visit us on our website for details on all our main stories. You can find them at trtworld.com. Or you can follow us on X at TRT World